Hi, everybody. I'm Kenda Ruck, and I am an international real estate broker. My team is the Living Colorado team, and we are dedicated to keeping you informed on what is going on in the real estate market. And today I am so excited to be talking to Nathan Jennison. He is the owner and managing broker of the Mortgage Architects. He is licensed in 22 states, y'all. So he understands deeply and is very invested in what is going on in the mortgage market internationally, or at least nationally. So, Nathan, thank you so much for agreeing to sit and chat with me and let me pick your brain this morning. It's been a crazy week in the mortgage world. What in the world is going on?
Thank you, Kenda. I'm honored to be here and always love talking with you. So thank you. We are basically seeing a lot of volatility in mortgage rates. They're kind of jumping all over the place. And the main driver of this, obviously, is what's been happening with the Iran war situation and the developments and the head fakes of like, is there going to be a deal? Is there not going to be a deal? What's going on with oil? How's that going to affect inflation? And what's going on worldwide in terms of where countries, in terms of their oil supplies. There's a lot happening, and it's very connected. It's a complex landscape. So
it's almost like the swings are so dramatic. Like one day we'll think, okay, things are happening. I think things are going to come down. Rates are going to come down. And then the next day they shoot back up. And you mentioned just now, it's a lot of the head fakes, like we're not really sure. And it's like the market is kind of being reactive, but not really even sure what they're reacting to. It feels really chaotic.
Yeah, and it is. The reality is when the Iran war started, we were, as far as rates, we were just kind of cracking under 6%. We're right between 5.875 and 6%.
That was in March, right?
Yep, March. Okay. Yeah. So basically, Iran war, the market started responding to the Iran war on March 2nd.
Okay.
And then we saw rates jump all the way up to 6.625. And then we had this interesting recovery where we saw rates drift back down all the way down to about 6.25 spot. And then that was where we were kind of 6.2, 6.375 is where we were sitting on a conventional loan, 800 credit score at the end of last week. And then this week we saw a huge jump. It went all the way up to 6.75. And right now we're kind of just settling at 6.625 with no real clear direction. We could see rates recover, we could see rates go up, and it's really just dependent upon definitely some market technicals, but also what news is going to really drive the news where it's going to drive the rates, honestly.
Yeah. And you say 6.6 ish. That's for what credit score? That's like the average rate, or that's the best rate?
So, this is based on, obviously there's a lot of things that affect interest rates in any given loan situation. But if we look at a general scenario of an 800 credit score on a conventional loan, let's say 5% down, that's basically where those rates are going to be coming in at right now.
Okay. Sounds good. What do you think is going to happen? Can you get your crystal ball out for me, please? And please tell me what's going to happen.
I know my crystal ball is definitely murky. So I like to think about things in probabilities, and because in that sense, the reality is nobody really knows what's going to happen. The hard part of this is that the main lever that's going to really drive news is whether or not we can reach an agreement with Iran. Whether or not we can get the Strait of Hormuz open again. And, that's, what the entire world is waiting on. So I don't know how to predict that. And all I know is that Iran does not seem to be willing to capitulate and willing to release the Strait, which is obviously a huge asset for them. And so if I had to put money on it, I would be putting money that we're probably going to see rates go up earlier than we're going to see them come down. And that's obviously not what any of us want to hear.
No.
But
how high do you think they'll get? Because a couple of years ago they were, in the 8s and 9s. So how high do you see them?
Yeah, we were just breaking 8% at one point in the last couple of years. That was obviously painful. I don't know is the easiest answer there. There's a lot of things that can affect that. And there's also compounding effects that happen in the midst of these sort of situations. So I don't have a solid gauge on it. It's one of those things that's going to change as time goes on. But, could we see them in the sevens again? Yeah. I mean, we're not that far off from that, unfortunately. So hopefully things get better before we see that.
You and I had a conversation a couple of weeks ago about a very important topic to me, which is how this affects the real estate market. And we have buyers who are just kind of waiting. They're just waiting because they're thinking it's going to go down. And then we have sellers who really don't want to put their house on the market and upgrade or downgrade because they're sitting at a 4.5% interest rate and they don't want to go to a 6.5% interest rate. So we're seeing real constraint on the real estate market. And you made a beautiful argument to me about why buyers should go ahead. If you find the perfect house, it might end up costing you more to wait. And just briefly, can you summarize that great example for me?
Yeah, absolutely. What's interesting is that, people tend to look at interest rates because that's the major pain point. It's the thing that we all knows, if you have a lower interest rate, you save money. And generally, yes, that's true. What's interesting though, is that it leaves out the dynamics of the market. And so if a buyer is actually negotiating right now, because there's less competition, what happens is when they walk through a home, a seller is much more interested, especially if that home's been on the market for a period of time. That seller is much more interested in negotiating with that buyer because there's just not that many buyers out there.
So true.
So when you have a buyer that is essentially negotiating a lower purchase price, obviously that's savings right there. But particularly if they are negotiating seller concessions, what happens in that situation is that you keep more money in your pocket. Now, when you are buying a home and you're getting a better price on it and you're getting seller concessions, that is a lot of money that is then benefiting the buyer. If you take a look at the difference of interest rate, if you look at, hey, if I buy now, I'm hitting let's say a 6.625. But if I wait and I get a 6%, man, that's like, that's a fair amount of money in that, in terms of like actual savings. Mm-hmm. But the reality is when you actually look at that, it's not that much money compared to, I just saved $20,000 for my purchase. It'll take multiple years of a large loan to ever hit that point. And generally during that period of time, there's a large chance that buyer is going to be able to refinance and actually lock in a lower rate and break way ahead of where everybody else is. The other thing about this is that's really important is that people are all waiting for the same trigger point. They want to see rates drop below 6%. And then when everybody jumps into the market at once, what happens in that situation is that we quickly are going to see a reversal where right now it's a buyer's market. Suddenly it becomes a seller's market. And if you are competing against other offers, your chances of getting a lower purchase price or seller concessions go out the window. And so you're going to spend way more money in that situation. And in the meantime, you also missed out on the appreciation, which is huge because that means, again, like all of these things are massive levers when you talk about a purchase of let's say a $500,000 home or more. Like it makes a really big impact in terms of the overall financials.
It sure does. And I think that what you're talking about is basing your decisions more on more complex math, which people don't like to do, and about more strategy, long-term strategy. And that's why it's so important to work with a very qualified, an agent and a mortgage broker who really understand the whole of the market and understand what's happening, where things are going, and can give you that long-term strategy, because it's hard to think about that sometimes.
Absolutely. I mean, and it's actually a critical piece. And it's one of the conversations I have a lot of times with people who are like, oh, I'm just going to go this loan. And it's like, okay, but a lot of times there's information that you just are not going to find that a great agent knows. And I think one of the key things too is working with an agent that's actually working for your best interest. And those sometimes are hard to come by. And it's one of the reasons why I really like working with you, is because you have that value. When you have somebody that's going to tell you the truth, that's not going to beat around the bush, that's not going to sugarcoat things, but that's going to say, hey, did you notice this aspect of this home? This may not be a good fit for you, not just somebody who's trying to, hustle you through a transaction. Yeah. And so that makes a massive difference and can help a buyer avoid, making mistakes that they later regret.
And the same on the lending side, Nathan, like, somebody may think, oh, I want this. But I really love that you sit and go through that process with them, step by step, pros and cons. So I think these are topics, if you are good with it, that we'll talk more about in future mini episodes. I'd like to do weekly calls with you. I think the information that you have to share is it's just phenomenal for the market, and it helps me understand what's going on as well. So
Absolutely.
I'm so grateful for your time.
Yeah, of course. My pleasure. So.
All right. Well, thank you so much for watching. If you have any questions for me or for Nathan, please just drop them in the comments below, and we read all of our comments. We'll definitely get back to you with as best an answer that we can give. We can't tell you where the rates are going, but we can talk to you about the trends. So thanks so much for watching.
Excellent. Thanks for having me. I appreciate it. Have a great day.